morning and welcome to OETV's Crypto Dome. I'm Mehdi and I'm joined by Adam Blumberg, co-founder at Interaxis. Adam, welcome back, mate.
Oh, good to be back, Mehdi. Good. As you and I don't want to say have talked about, but have texted back and forth. I didn't have a voice for a couple of weeks, so it's good to be back here and always something going on in crypto.
And you sound charged with a new, fresh voice to talk about everything crypto.
I've been holding it in. I haven't been able to talk about it with anyone. So now let's get it out there.
So yeah, it's been certainly a few weeks of a three-letter kind of situation, FTX. But as the title today suggests, it's not the bagel; it's everything but the FTX. So I think that's been widely covered over the last several weeks. There's been lots and lots of chatter about the fallout, about the implications on different companies and different firms and what it means for crypto as a whole. But there's other stuff out there. So, I'm sure we'll touch on FTX and some of the implications on some of the conversations we have. But let's start having a look at some of the other things that have been happening over the last several weeks.
Yeah, let's do it. There's definitely other things going on. Building keeps happening. So more than happy to talk about something else.
That it does. And you know what? One thing I will say, I know that we don't talk about Bitcoin pricing and such, but I've been watching Bitcoin over the last several days, as you do. And obviously we've seen some weakness in the broader market, the equities market, let's say S&P, just focus on that. And Bitcoin seems to have kind of settled a little bit. So I feel like, whether it's settling at a lower level or it's this 17,000 level, I know we've had these conversations at 20,000, 19,000, 18,000, or we're now at 17,000. It kind of is hovering around there and it hasn't been selling off as aggressively sometimes as the rest of the broader market. And with
Sorry. Yeah, I mean, you said you've been watching it for the last few days, even maybe the last few weeks, man. It's like watching paint dry. It's just boring.
I know. When you watch somebody's stocks move, you're like, all right, well, Bitcoin seems like a safe bet right now. But yeah, so we've that's drawn out some decent commentary from some of the bigger names or some of the more vocal names in the crypto space. Raoul Pal came out with a very interesting piece recently, and he overlays global M2 money funds with Bitcoin. And he's highlighting how we're kind of set for a nice ramp up in Bitcoin into the end of the year, into early 2023, just based on money flows on a global basis. The story actually kind of made a lot of sense, and the historical kind of overlay looked very enticing. What are your thoughts on his commentary?
I read his commentary, and of course, with anyone like Raoul Pal, he's a huge crypto investor. So anything he's going to, lot of things he's going to say.
Adam, I've got to correct you there. He comes across as a huge crypto investor, but for the most part, from what I understand, he barely held one Bitcoin.
Really? Okay. Yeah. Well, he's talked about it quite a bit, and of course his company has a huge crypto division. But for his career, he's been a big macro investor, and he made quite a bit of his money on huge macro trades after the 2008 financial crisis. And so he does look at the macro view, and even in the article that you're alluding to in his talk, he alludes to Paul Tudor Jones, who's an even bigger macro investor, right? But the chart you're talking about talks about M2 money supply, and when M2 goes up, Bitcoin goes through the roof. Right, it just goes kind of exponential. And what he's saying is M2 is kind of at a low. When it starts heading back up, which it's at the point in the chart when it probably hits its bottom and then maybe starts going back up. When M2 starts creeping up, Bitcoin flies. And he even, again, alludes to Paul Tudor Jones' comment on when the money supply goes up, you want to back the fastest horse. And in 2020 and 2021, his fastest horse was Bitcoin. And he was correct there. So that's kind of what Raoul Pal is saying. And the other things he says are, even though interest rates are higher, and we think that maybe because there's a risk-free rate we can get that's a little bit higher out there, that people are going to go that direction, but that doesn't really affect tech stocks, and it shouldn't really affect crypto all that much because the upside is so much bigger than what you can get with a risk-free rate of return.
Absolutely. And to be honest, I don't necessarily agree with everything he says, but I'm kind of in line with his thinking on this in this particular case.
Right. And look, his historical analysis is historical analysis. Like, charts are charts, and you can't. If you overlay M2 with Bitcoin, you see what has happened in the past. You see where we are right now, and the insinuation is if M2 starts to go up, Bitcoin in the past has always gone up along with it. So that's really easy to look at. He's not predicting that will happen, but he's saying here's what's happened in the past, and logically that makes sense.
And Joe, looking at that kind of ties into some other commentary as well. There was a hedge fund manager, Mark Yusko of Morgan Creek Capital. He was talking about how, looking at the government debt that we have, at some point, policymakers are going to have to return to devaluing the US dollar to pay off this government debt. And we look at the DXY, which is the US dollar index, and how it's been on a bit of a tear recently. But that's versus, it's ultimately you're pairing currencies against other currencies. So it doesn't necessarily mean that the dollar is strong. It ultimately is pairing against, let's say, dollar, euro, dollar, sterling, all these things. It just means that everyone else is in worse situation than the dollar, right? So
exactly. Yeah, it's the dollar versus the euro and the yen. It's not the dollar versus a loaf of bread.
Exactly, right. That's exactly the point. And we'll see the devaluation of the dollar come to light. And as that happens, he's also predicting that we're going to have to see more and more nations start utilizing other assets, whether it be gold or Bitcoin, as part of their treasury holdings. This makes sense.
Right. It makes sense. It's things that it's what treasuries have done in the past, right? Governments have held other assets as part of their treasury, most notably gold, right? Gold was the huge reserve asset for so long. And once we got off the gold standard, countries started holding other countries' currencies as part of their treasury, in addition to gold. And what Mark Yusko is saying is eventually they will hold Bitcoin. And what he does say is this isn't going to happen in the next 2 to 5 years. We're talking about 10 to 20 years. They will start to hold Bitcoin as part of their reserve. They're not going to make it their number one reserve asset, but it will start creeping in there and will likely, in his terms, replace much of of how they hold gold in their reserve. They will replace that with Bitcoin eventually. And it makes sense. It's an asset where we know exactly what the supply is. We know where it is at all times. We know how to hold it. It's relatively easy for them to hold it. So, and it's completely transparent. So we can see it at any time. We see exactly what's on their balance sheet every second.
Yeah, you'll ultimately be able to see the wallets or insinuate which wallet is whose, but you'll be able to see which one belongs to which sovereign wealth and which government, etc., and you'll be able to have comfort in knowing that the reserves are there.
Exactly.
Let's have a look at Grayscale. I know that we don't necessarily want to discuss Grayscale in the same coin as in the same topic as Bitcoin per se, but obviously it's a great proxy for it for a lot of investors that haven't got involved in Bitcoin itself directly. There's a bit of hair on this at the moment with Bertree, which is a hedge fund that's actually suing Grayscale, who's obviously the parent of what's
GBTC.
the ticker? GBTC.
GBTC.
Yeah, I'm losing my mind here a little bit. It's trading at somewhat of a discount, 44% at the moment, and they're saying that it hasn't been managed correctly. If we remember, it used to be trading at a premium of 20 to 30%, and now this is quite a significant discount. Do you think there's any meat on the bones to what Bertree is alluding to?
Well, of course there is. So Grayscale Bitcoin Trust, or GBTC, is the idea of it is you and I might buy a share or part of a share of Grayscale Bitcoin Trust. And the idea is with that share, we own a small piece of a Bitcoin with every share. Now, at one point, Grayscale allowed for redemptions. I could redeem my GBTC for that tiny piece of Bitcoin. at the moment, they're not allowing any redemptions. And one of the main reasons they're doing that is they're trying to kind of strong arm the SEC into allowing a Bitcoin ETF, right? Because they want to turn GBTC into an ETF. And so they're not allowing anyone to redeem. And they're kind of showing the government, look, you're hurting our investors, because if you would just allow an ETF, then our trust would then go trade at, 1-to-1 with Bitcoin, right? It would move 1-to-1 with Bitcoin. And what Furtree is alleging is Grayscale, you need to stop using us as your ammunition to try to get your ETF approved, because we have lost a tremendous amount of money just because you won't allow us to redeem. You need to start allowing those redemptions, because all Grayscale has to do is apply, I believe it's called a Reg M redemption. They could apply for this, and people that own GBTC could then redeem their Grayscale Bitcoin Trust shares for the proportionate amount of Bitcoin that Grayscale has in the trust. And that is what's causing this 43% or 47% or whatever it is discount to the price of Bitcoin. And people have lost a tremendous amount of money. And quite honestly, it's also one of the main reasons why we've seen, or one of the main reasons, it's a huge reason why we've seen several centralized crypto companies go bankrupt or lose a lot of money. BlockFi was using GBTC as a hedge. And when we went from huge premium to huge discount, that significantly, in the negative way, affected the books of BlockFi. So several companies are using this as a hedge. Several companies are using it as an investment. And you obviously have to market to the market price every day. And it's a huge problem that Furtree, a hedge fund, which I don't know how much they have in GBTC, but it has to be a huge amount. They can't go redeem, and they have this huge discount. There's nothing they can do about it. Their hands are tied. They're not going to go sell it at this huge discount. And keep in mind, there are also people now trading that discount or playing on it to say, I'm going to go buy it because the moment an ETF, either an ETF is approved or Grayscale allows redemptions, I capture that 43% again.
Yeah. No, but we'll definitely want to keep an eye on, because I know there's a lot of people firsthand that are suffering from the lack of performance that's been, it's been outweighing the performance of Bitcoin itself, which has already been bad anyway for 2022, and then it's been exacerbated by GBTC. So one for the radar. I know we were staying away from the FTX implosion, but something has come out of this, and it involves our old friends at Goldman Sachs. They're actually, and obviously Goldman knows how to make money, right? There's a lot of opportunity that has come from the FTX implosion, where there's definitely some assets worth picking off, and Goldman's there. I don't want to equate them to vulturistic characteristics, but they're smart businessmen, right? And at the end of the day, they know what they're doing. And there's a lot of, I see this as a massive positive in the fact that you've got a Goldman coming in. They see the value in what's there, whether it's on the structure, on some of these assets that are there, some of these companies, what they're doing. And they're now trading at a massively discounted price, and they're starting to pick them off. This is great, as far as I can see.
It's look, Goldman, and I think other companies, banks are probably going to, JP Morgan, I assume will start. Absolutely. I mean, they've been huge in crypto, even regardless of what Jamie Dimon says. They've been huge in being involved in crypto. And I assume they're going to come in and start picking off companies, protocols, whatever they are, that now seem either, undervalued, or to them, properly valued, because there's no hype around it, because there's less adoption, because everyone's waiting on regulation. And look, if anyone knows what's coming down the pike in terms of regulation, it's going to be Goldman and JP Morgan, right? They're right there in the room with the lawmakers. So they know what's coming. They're going to start picking off. Excuse
me, sorry. So was Sam Bankman-Fried, just so you know.
Exactly. So they all know what's going on, and maybe they knew what was happening. Maybe Goldman knew what was going on and said, look, we're just going to wait around with our piles of cash until this all implodes, and then we're going to be there to pick things up. But you're right. It's smart business. I'm not a big fan of it, to be honest, because what it means is the same organizations, the same traditional financial companies that Bitcoin and crypto are meant to replace, are the ones who are going to end up owning quite a bit of the crypto companies. So you go with the old the Who line, right? New boss, same as the old boss.
But the thing, so I agree with you that it's not in the true spirit of crypto, right? But the only thing that I will say is that I think it will put regulators more at comfort dealing with established financial institutions that they've been working with for many, many years, and they've gone through good times and bad times, and they've come to some form of regulation that they feel is working for the existing financial situations. And if they can build a framework around the new crypto universe, right, they can and tie it to DeFi, which is a complete conflict. But if I think it's just going to put regulators at ease in some form.
Yeah, I think it will. And look, I think if through this, we can get the centralized entities regulated, right? The fact that if I go put my money into Coinbase or Gemini or Kraken or something like that and buy Bitcoin and they're holding on to it, that they have to keep my money segregated from whatever they use from investment. We get that regulation in there. That's great. And that's something we need. As long as they don't go too far and say, they're trying to over-regulate decentralized finance, and we don't have, some DeFi protocol sponsored by Goldman Sachs or something, or owned by Goldman Sachs, then I think that's a good thing. I think you're right. I think we need regulation for the centralized entities. If those centralized entities are going to be the same ones that we've known in the past, and they're JP Morgan and Goldman, look, it's not that much different, and honestly, probably better than FTX, right? It can't be worse. They're entities that are already heavily regulated. They're entities that already know compliance, and they're not going to risk their reputation and everything with crypto and trying to do something that is anti-compliance or not compliant or not regulated.
I completely agree. And a lot of where we are is being attributed to stable coins or particular stable coins in the past, right? And that kind of there's been more news around how there's been a shift in who's holding the stablecoin market and who's managing it best. And Circle's obviously in there. It seems like they've lost a little bit of their market share recently as main stablecoin, and they're now looking at staying private. Do you see this changing? Do you see this being should this raise any red flags? Do we think there's going to be any more issues coming out this time?
So what we've seen is the market share, the USDC market share has gone down in terms of market share of overall stablecoins. Part of that is not as many people are experimenting or utilizing DeFi. You're not seeing those 190% returns that people were jumping into and using some stablecoin for it. You're also seeing more of a move away from the United States. So you're seeing more and more crypto companies or decentralized protocols or whatever that are outside of the US, and therefore they don't need to use USDC. They can use Tether and be okay. More people that are using Binance as their exchange or their custodian use either Binance USD or BUSD or Tether as their stable coin. I was speaking with someone the other day who's in the Middle East, and he said in the Middle East, Tether is the most used stable coin. They use it really, really often. They can pay their bills in Tether. Oh, so wow. That's what they're utilizing over there. USDC is more than not mainly for the US and Europe, for people to feel comfortable because it's backed one for one with either a dollar or a dollar equivalent. And so you've seen USDC market share go down a little bit, and therefore Circle saying, when crypto isn't the hot thing right now, it's actually kind of the negative thing, the cold thing, whatever that is. They're just saying, look, we're not going to take this opportunity to go public. We're not going to go through a SPAC. But SPACs are not hot either anymore. Yeah. This isn't the time to do it. They've said they want to go public at some point. They're actually making a tremendous amount of money because they're holding all those treasuries to back the USDC, and they're making so much more money on them, right? They're making so much more interest. So they're making more money than they ever have, even though their coin isn't being used as much.
That's it's what America's built on, my friend.
Exactly. So I think they're okay. It's probably good for them to not have to go through the compliance and regulation and everything of being a public company. Let them go keep building what they're building without having those issues.
we'll keep an eye on the stable coin side of things, because there's a lot of chatter that obviously there's scrutiny on some of the workings of the likes of Tether and Binance, and hopefully we don't see anything pan out from that, because that's the last thing I think we need.
Exactly.
And on to one of my favorite topics, Adam, Apecoin. So there was a headline that I saw, and I've been a big proponent of Apecoin. I like it. I think it's kind of a fun tie-in with the NFT universe. I've now come around to, yes, I hold my hands up. Apecoin holders are losing their stake tokens when paired Bored Apes get sold. What does this mean, and how can people not go down this route and go ape beat?
What I've seen, and you've been actually more of a proponent of Apecoin and Bored Apes than I have, which is funny. But the deal was, in order to stake their Apecoin, to earn more Apecoins on their staked Apecoin, they had to tie it to their Bored Ape. But what I guess a lot of people didn't realize is, when they did that if their Bored Ape got sold, if they had their Bored Ape listed on something like OpenSea and it got sold, then their staked Apecoin went along with it. They were tied together through a smart contract. So you have people that are going and picking off Bored Apes that are for sale and have staked Apecoin attached to it, and they're basically getting free money. And so you might have a Bored Ape, and you might stake your Apecoin that you got with it, and you have it, listed for $500,000 worth of ETH or something on OpenSea, and someone might go take your ape, get all your staked Apecoins, and then go sell the ape right away for the same price, and they get to profit all your staked Apecoins. And I think it's just something that people didn't realize. Maybe they didn't read the fine print. They didn't realize how they're tied together, or they just forgot to take their Bored Ape off of, they forgot to take it off of the for sale list on OpenSea. And it's just a matter of, one of those things in crypto. You kind of have to read everything, because once it's gone, it's gone. There's no making a phone call and please give it back. And there's no insurance for it or anything. You just got to deal with those problems. But anyone doing that I don't want to say they should know. It's like with any legal contract. You just got to read all the fine print.
And you know what? We'll get to it. But obviously, you want to educate yourself a little bit as well. And we know the right people to help with that education. Adam, before we wrap, there's a couple more things. Stripe. So Stripe, I've used Stripe for many years on different projects, and they're obviously a very phenomenal tool for helping process payments when you're facing especially retail customers. It's a very easy way of utilizing credit card payments and such within any of the technology that you're doing. So I want to bring up Stripe, and I want to bring up Ledger and their crypto wallets. Lots been happening here. We've got new designs, and by the way, designed for Ledger Stacks looks awesome. I would urge everyone to check it out. That could be a great Christmas gift, even though I think they only come out in Q1. Be a Christmas gift in waiting. And what's happening with Stripe? This is all very interesting. Why don't you run us through what's happening?
It's so interesting. This just kind of came out of nowhere, and this kind of goes counter to all the bad news we've seen in crypto. This is the good news. This is the adoption and people actually utilizing the system and understanding, things like self-custody. So with Stripe, they came out with pretty much a widget, the ability for any, decentralized finance protocol or any app to basically put in this Stripe widget that allows you and I to immediately go from money in our bank account to money on a crypto protocol, right? Or a DeFi protocol. So it's basically taking my fiat money and converting it into crypto right through this widget or right through this app. And it's Stripe who already knows processing. They already know credit card processing and bank card processing, and they've already done the KYC and everything. So it eliminates some of these steps, because right now, before this, the step was I have to go buy crypto, something like Coinbase or Gemini, wait like 7 days, and then move that into a wallet. And Stripe is basically short circuiting that. Stripe, of course, has money transmitter licenses in every state in the US, which is a huge help. And they're basically short circuiting that and saying Adam can now buy crypto directly in any of these apps that employ this widget. And as part of, one of my organizations, Planner DAO, we've already implemented this. We've already said you can pay for your membership using this through this Stripe widget. So it's something that we're already implementing for our own DAO. I mean, and it was super easy to do. You just drop a bit of code on the website and it's done. It's really easy. And then going to Ledger, this, after in the wake of course, the name we shall not say, I guess if we want to go that direction, in the wake of everything going down and people now really getting on board with getting your tokens, getting your crypto off of an exchange because you're not sure how solvent they are, and everyone going to self-custody. And sometimes that's something like a hard wallet. Ledger being pretty much the world leader in producing these hard wallets, they went to the designer of the iPod and the Nest thermostat to design a hard wallet because the hard wallets have been notoriously difficult to use. They're tiny, tiny little devices with tiny little screens. And so they have now designed a hard wallet that's actually really easy to use. So with both Stripe and Ledger now, you're going to get easier ways to interact with crypto and easier ways to adopt and easier ways to custody your own assets, which of course goes along with the ethos of crypto. It goes along with exactly what it was designed to do, and making it that much easier, putting a big screen on that, if you could do what crypto what the iPod did for music, being able to take your music everywhere, that's huge. That's a monster step. And it's something we've been looking for and waiting for a long time. And all it took was the designer of the iPod to do it.
Fantastic. Keeping it simple, Adam.
Yeah.
And what a way to wrap up the show, because it was a nice positive. We like that. We started on the whole, on the back foot with crypto where it is and the name we won't say. And we rolled into something very positive. So, Adam, as always, thank you so much for sharing your thoughts and your time.
Thank you so much for having me. And it's great to be back and good to be ending on a positive note for the holiday season.
Absolutely. And, obviously it's been a couple of weeks away. So I want to make sure that everyone knows, for financial advisors, especially who are watching, don't forget to check out the links on the side to digital assets and crypto education for financial advisors. You will receive a certification in digital assets so you can better serve your clients. Everyone, thank you for watching. Have a wonderful day and good luck investing.